Hey guys, welcome to Dividends Friday, and today I'll be sharing with you a Singapore stock that has been paying out dividends, and it may be greater than the sum of all its parts. What am I talking about? Let's go! But before that, remember to subscribe to our channel and click the notification button so that you will get notified whenever I talk about my dividends challenge and all other topics. Let me start by telling you a story. There was this man that was driving a beautiful Ferrari that cost him $1 million. So when he was parking his car, a lady came up to him and asked, "Hey, do you know that this Ferrari that cost $1 million, you could have used this $1 million to feed a lot of poor people around the world?" This gentleman looked at her and said, "Well, I think I'm doing even more than that. Do you know why? Because my Ferrari is made out of many parts. For example, the tires. There are people who are tapping for rubber, making them into tires. They get jobs. And the people who are actually making the machines and the metal parts and the molding and the plastic parts. In fact, this Ferrari that cost me $1 million, I am contributing to the economy and feeding more people. And when the businesses get my money, they can employ even more people and they can build even more cars and feed even more people." Wow, I mean, what a perspective, you know. Initially, I was looking at people buying expensive things and I'm asking like, wow, these people are so materialistic and greedy, and you know, I'm judging them, but I think it is not for us to judge. But the key thing is, there are many lessons behind even this one story. And these are the two lessons that I want to share today. The first lesson is this: you know, one particular product, it can be your watch, your computer, your iPad, or anything around. And today we are talking about cars. It consists of many parts. So you can look for opportunities even in just one particular product, which is the stock that we will be talking about today. And the second portion is, instead of just feeding people, we should give them opportunities to feed themselves. No, I'm all for helping the poor. You know, there are some people who are in such dire situations that they need help. Go ahead and help them. But I think the best help is to help them to be able to help themselves. So this is what I'm going to start with. I'm going to tell you how I found this stock so that you are able to feed yourself as well. Because many people are asking me, how do I get all these ideas? Well, this is one particular place. On my screen, you can see this thing called SGX. And today we are talking about Singapore stocks. And I understand that quite a number of audiences are asking me, can we talk about like Malaysia stocks? No problem. We'll go to it the next other weeks. Okay, cool. So now, I'm going to talk about Singapore stocks. When you come to www.2.sgx.com, okay, you can go to securities. Under price and screeners, click on stock screener. You'll see that this thing called stock facts. And what I'm looking for are stocks that are giving dividends, right? Now, what I did is this. It's very simple. When I scroll down, there's a list of stocks starting from A to Z. Now, 800 super is a numerical number. So if you want to get listed, make sure that you start with a, numerical number and you'll be on top. Okay, what do I do next? I actually sort them out. You can see this portion. I'm looking for stocks that are giving good dividend yield. So click on this. Well, you can see 200%, 40%. So I start from here. Okay, but one thing that I add on to my analysis is this. I also look at the PE ratio and I try to look for stocks that I can already understand. So if the PE ratio is too high, for example, let's say it is 19 and the dividend yield is 14.58. Okay, usually if the dividend yield is so high, like 200%, it will cause me cause an alarm bell. But there's no harm taking a look, alright? So for example, let me just show you. I'll just click and then go through and look at this particular stock. You can see RHT Health Trust. Click on the financials. The first thing that I want to look at is the total revenue. Can you see the total revenue? From 2015, it is going down. To me, okay, I'll be skipping this already because I am not interested to invest into businesses that is decreasing in revenue. And if you're very new to investment, revenue means how much money are they collecting from their customers. So if their customers are paying them lesser, or they are getting lesser and lesser customers every year, this is a declining business. I'll be skipping this. Now I want to share with you a very sad situation. I mean, I really mean this seriously when I say that it's a bit sad, because I went through quite a number of Singapore companies and a lot of them have declining revenue. You can see, for example, this company, you can see it's declining. You can see that. And the next one, this Serene Technologies. It used to be a company that we were looking at. you can see from 16 million dropping to 70 million. I mean, it's bouncing back up, and many others more. So Serious System, okay, this one is relatively flat, not too bad, but again, I want to look for companies that is stable and growing. Okay, Terlong Holdings, not too bad as well. But like I mentioned to you, many of the companies that I noticed has been declining, those listed in Singapore. So pardon me if I don't talk too much about Singapore stocks, because as an investor, I want to invest in companies that are growing. I really do love my country. I want my country to prosper. As an investor, however, I have not been able to find many very good companies that has been growing. Okay, so now even Viacom, one of the darlings in the investing world, you can see that it's very flat. And one thing that I want to point out is the payout ratio. You can see it goes up to even 90%. So they are making like 33 cents normalized diluted EPS. So basically it's a very conservative way of looking at how much they are making per share. You can see that the dividends is higher than the per share earnings. So they are tapping on their reserves to actually give out the dividends. Of course, there's many ways to look at this, but to me, not a very good investment at this point in time. Now, at last, I found a company that looks a little bit more interesting. Can you see the revenue has been increasing? So, Sunningdale Tech, okay, what do they do, and is this a good investment? This is what I'm going to talk about today. You can see increasing revenue. The next thing I look at is the net income. Revenue is how much they collect from their customers, but are they able to retain the money that they collect? Net income increasing and dropping. Oh, what has happened? I went in a bit further to dig out their annual report. So this is the annual report of Sunningdale Tech. You can go to the website and then look for the report. Okay, so let me zoom into the portion. I wanted to show why are they like not doing this that well. Okay, maybe let me just show you a portion that intrigues me quite a bit. You can see this part, the revenue, as I mentioned, 2015, 2016, 2017, it has been increasing. And EBITDA is like, you can see this an entire portion, earnings before interest, tax, depreciation, amortization. You can see that this EBITDA has been increasing as well. Can you see? They are making more and more money every year. So why do people use EBITDA? This is the money they make, the earnings, before paying off interest, before paying off taxes, before paying off depreciation and amortization. Now, interest, taxes, depreciation and amortization, right? In many investors' eyes, these are not the common daily or like a yearly operation kind of issues that you face every single year. So it is not really, it doesn't show your earnings ability. So that's why they look at EBITDA by not considering interest, tax, depreciation, amortization. And you can see if you don't consider all this, it's increasing. But however, once you actually take into consideration tax or amortization and stuff like that, you can see that the profits decrease. So, but the core earnings, how much they are making is actually increasing. So when I take a little bit further into the financial report, I think this is the chairman's statement. He mentioned this, okay, the group recorded a gross profit, okay. There was an increase, however, the decrease in the income, okay, in other income was due to disposal of the property plant equipment. So because of amortization and a one-time loss or gain, that's why you can see that the profits, how come it's fluctuating? But the truth is, the ability to make money has been increasing. So interesting stock to look at. Now, what do they actually do? So I just want to show you this portion. You can see that this is the 4 key sectors they are in. Let me zoom in for you. Automotive, consumer IT, mold fabrication and healthcare. Okay, basically this company is a plastic company. Okay, maybe I shouldn't say that way. They are a plastic creation company. Okay, basically, right, what they do is they make plastics, okay, and then they serve the different industries. So for example, automotive, you can see, let me come back here. You can see the automotive, which is the car industry, and the consumer IT, they are the biggest. So let's understand a bit more of this, okay? Very simply, you go to their website, you can see their businesses. So let's see what are they doing in the automotive and aerospace segment. These are their capabilities, and this is what they do. They do, like, for example, window lifter mechanism. Wherever you press the window of your car and it's going up and down, they are the one producing it. They do car keys, door lock mechanism, and quite a number of things that I do not really understand. But generally speaking, they show some pictures over here. You can see all these car parts. The plastic component, they are the one who is doing most of it. Okay, so this is the plastic component, and the next portion, consumer and IT. Again, they have all the portions that they describe over here. So like electronics, telecom. Okay, they mention all this, right? But again, it is manufacturing of the plastic parts. Can you see? Plastic parts. So you can see, example, this is familiar to some gamers. You can see these are the console, the controllers for the games, and many other portions. Now, what other things do they do? The other two portions, you can see healthcare. Okay, self-explanatory, plastic for the strings, and many other portions, hearing aids and stuff like that. And tooling is basically they do molding. You can see more capabilities of tooling. They do molding. Since they are actually creating plastic already, they have all the capabilities. They are also providing these services for people who needs to actually do molding. Okay, so these are the ideas of basically what they are doing. Am I saying a lot of basically? I think so. Let me cut this down. Now, let's go into their financials. Okay, before going to their financials, right, I just want to explain they are in quite a number of countries, 19 over sites, and a lot of times they are looking for new factories where there is lower manpower cost. So they are going to China, they are going to quite a number of places, going to new plant in Penang, looking for cheaper manpower cost, also cheaper cost of operations. Because how they make money is by providing all the plastic parts. So they want to actually lower their cost of production. Now, this portion is this is very important, because what we need to know is their customers very concentrated? Meaning to say, if they only have a few customers, it's going to be very risky, correct? But you can see that out of 80% of their revenue, they have 30 customers spread over, and the top 10% made out of 50% of their revenue. So they have at least they have like 10 different customers to diversify into. If one of them say, sorry, we do not want your services anymore, they can have revenue from other streams. And one thing that I noted is this: for the past, I think it was 30 over years, their retention rate is very high. Their customers always come back to them. Okay, so who are their customers? We mentioned some of this. So automotive, they have, if I pronounce it correctly, Bosch. Okay, Continental, Vialo. So all these, right, they are the like tier 1 manufacturer of, before they go to the car manufacturer. Car manufacturers will be like Toyota, Honda, and BMW. So the tier 1 manufacturers will be these companies like those Continental, those people who create all the car systems. And this is where Sunningdale is tier 2 parts manufacturer, the plastic specifically. Okay, so this is to understand what they are doing. Again, we, like I mentioned, 30 years of track records, and they have a very high retention. And based on what I am reading here, precision engineering is very difficult to enter because of technical know-how. So it's not so easy for you to like create, let's create a company to compete against Sunningdale. Okay, now let's coming back to this. Let's look at their finances. You can see that their revenue for the past 10 years since 2008 has been increasing steadily over the years. And net income, there are some down years, but overall increasing as well. And these 3 years, as mentioned, because of one-time gain, one-time loss, there is some readjustments. The dividends is what is impressive. You can see that they have been increasing dividends. They don't really have a dividends policy, I was reading, but you can see that they give dividends out very steadily over the years. And the payout ratio, very conservative, I would say, not too much. So this is something that I pretty much quite like a lot. One thing that concerns me is the net margin. You see that the net margin, it is not very high. It's only about 5, 6 or even 4 to 3%. Well, again, these 2 years is not very accurate because their core earnings has been adjusted downwards due to, their earnings has been adjusted downwards due to the one-time gain and one-time loss. But overall, not extremely impressive in terms of net earnings. In interest coverage, how much debt they have? 9.18. This is pretty decent, and I checked their balance sheet, pretty much quite a low debt and not too much concerns in terms of needing to expand their businesses. So other things that we can look at, automotive, a clear growth driver. Global economy still expanding. These few years it has been slowing down. However, the demand for cars has been increasing, and they are quite a big player. They're quite a big player in the automotive parts producer in tier 2. Okay, this is very new to me as well. So the board of directors, if you don't know these guys, read about them, especially Mr. Cole, someone very established, and somehow like almost anything he touches turns into gold. Not always accurate, okay, but you can see they have strong backup in terms of their ability to reach out and network. So finally, the risk, we have to look at the risk, you see. So from Mr. Ko Boon Ho, which is their group CEO and executive director, these are the things that we need to take note of. They are impacted by headwind in the form of rising labor and utility costs, and also price pressure. These are things that are not good for the company, because if you have to pay more for labor and utility costs, it will eat into your margin. So you can read more about this, and they say that the group was impacted by slowing automotive market as the global automotive sales actually decline. So these are the parts that probably is a danger sign. But again, this company doesn't have much debt, and they have huge cash, growing steadily with recurring income because of their contracts with all the other tier 2 providers and also all the other customers. Pretty much okay. You can read on and also find out that overall, well, they have to say something like this. We remain confident in our resilient business model as the long-term sustainability and profitability of our operation remains on track. Well, I've been seeing this term a lot when I read into their annual reports and read into reports of this company, resilient business. Well, I guess there's a certain, I would say, demand for these plastic parts over and over again every single year, and there's not many competition in the sense that even the people nowadays or around the world, they don't really want to set up precision engineering, creating plastic parts. It's very niche. They are one of the market leaders. There are few players out there, but generally speaking, they are doing quite well. So overall, why my interest in Sunningdale Tech? Because when you look at the valuation, the dividend yield 5.47%, PE ratio 9.8, and price to book is 0.7. You could all round, for all types of valuation wise, consider cheap, possible potential, but having some headwinds these few years. But overall, I think it is a good idea to look into this company. So let me show you my face back again. So this is Dividends Friday, and I'm talking about Sunningdale Tech, a company that I will collect a bit. In fact, I'm already vested. So disclaimer, I already bought some of this company. Do your own due diligence, and I'll see you next Friday for more Dividends Friday. And next week, I'll be talking about other stocks other than Singapore stocks. I've seen a lot of comments talking about what stocks you want to talk about. Please continue to throw in the comments. Any other questions, please type in here, and I'll be sharing with you more next week. I'll see you guys. Bye-bye.